Good morning. It's Talking Bull. It's Steve O'Hare, and today is Wednesday, the 23rd of November, and we're bringing the show live to you, streaming through TradingView, and hoping for a bit of interaction today. We're going to go through the headlines as normal, then we're going to dive into some of the technical analysis that's going on behind the markets, and then have a bit of fun at the end with our gun-to-head trade idea. So let's kick it off now with the news headlines that we've seen over the last 24 hours. So Bundesbank head Nagel hinted that he would back a smaller 50 basis point rate hike at the December meeting, but he did not want to get drawn into a debate about it. He also commented that rates were still very low and there was still a lot of work to do in raising rates, given that the inflation picture was likely to remain strong in 2023. The Richmond Fed Manufacturing Index improved marginally to -9 for November from -10 the previous month and in line with consensus forecasts. Shipments declined on the month while there were further sharp declines in new and unfilled orders. After Tuesday's European Open, China announced a tightening of coronavirus restrictions with a negative test result needed within 48 hours of entering public spaces, such as shopping malls. Risk conditions overall recovered on Tuesday with net gains for equities led by a significant advance from Wall Street. Overall market sentiment held broadly stable on Wednesday. The latest PMI business confidence data will be released on Wednesday today, with data due for the Eurozone, UK and US. The overall tone of the data will be important for risk conditions, and the relative performance will also be significant for expectations surrounding exchange rate moves. And finally, the Reserve Bank of New Zealand increased interest rates by 3/4 of a point, 75 basis points to 4.25%. That was in line with consensus. So, yeah, looking like the rate rises to continue. Still that element of inflation issues out there globally, and a little bit of real sort of like tough times ahead, shall we say. So let's dive into the markets. Let's see if we can get any ideas out of what's happened over the market moves over the last 24 hours. Bitcoin, we're going to start with that straight away. We made a significant low yesterday. Sorry, the day before. Yesterday's price action clawed back most of the gains from Monday's sell-off, and today we've advanced even further. So a really nice recovery from Bitcoin, which was really looking a little bit ominous in front of the 15,000 level. So the low of this move we've got is 15,480, and we're already trading about over 1,000 points higher than that. So for me, the real sort of like area of resistance that we'll need to target now is this band of resistance between 16,800 and 17,200. So there is a long way to go before we snap out of this cold streak that we've seen in Bitcoin. Take a look at the hourly chart. Let's get rid of a few of these lines which look a bit confusing. Nice little inverse head and shoulders formed here on the hourly chart. Let's give you an idea of where we think this measured move could go to. Here's the left shoulder, the neckline, the head, the neckline. So that's quite a nice little reversal formation. And if we want to measure where the potential it is for this move, we can get a nice measured move target of there, 17,083. And that runs in line with where we've found resistance before. So that's not a bad little potential level to aim for, even seeing this sort of like bullish flag pennant type thing, even getting in long here. There's still good scope for risk reward on the upside. Your risk could be below here. Normally when we get inverse head and shoulder formations, we come back, retest the neckline. Hasn't done so on this occasion. It had a little bit of a pullback and looks to be advancing onwards. There still is potential for a further pullback. The real risk level now for me is a break below 16,000. That will negate the pattern completely. And we can see also, bear in mind this RSI that's looking moved into overbought territory and is now stalling ever so slightly. So yeah, on the downside, we've got the initial support coming in at 16,430. Really looking to kick on from 16,600. Potential move towards 17,000. And the second risk level really to watch is a break below 16,000. Be careful with that. Good morning, everyone. Saying hello in the show. Good morning, everyone. Let's dive into see how the commodities are getting on. And again, we saw a bit of an improvement yesterday in this picture as well. Now, taking a look at gold, we've broken out through this downward trending channel. So there is gold's looking a lot shinier and brighter than it was just a few weeks ago. We've broken up through the resistance at 1730 to 35. We topped out just in front of the 38.2% Fibonacci retracement level, which is a normal retracement level that we see in markets all the time. 38.2% is very key, and we always refer to it. 61.8 is the second Fibonacci level that we really focus on. But the first one, we get this initial wave up, then we get the pullback, then we get the potential for the second, the third wave higher, second wave higher, the third wave in a Elliott wave theory, and that would be targeting somewhere near around $1,900. However, it's very key what we do when we come back to test this resistance that we had at 1735. We were talking about this from basically from the 14th of September. And also from the 4th of October, when we formed this potential for this stall in front of that resistance. Broken up through it, and as you see, we stalled when we came back into it. So resistance turns into support. It's very, very important. We see it so often. Now, the candle then that formed after that was an inverted hammer, which is a bullish candle, and we look quite positive sitting in front of this resistance at the moment. So again, probably relying on a little bit of dollar weakness to initiate a further upside potential in this move. But the levels to watch really on the gold today, 1750. If we get a break above there, maybe a close above there on the hourly chart, the 4-hour chart, then that will be positive. And really looking for that 1730 level to hold this rally. A break below 1730, and it opens up further downside and potential for slipping back into this channel. The main area of support all the way down at 1615 seems like a long a sort of a far off point now, but it wouldn't take much for us to slip back into there if we get some really renewed dollar vigor. Take a look at silver also now, and this inverted head and shoulders is looking like it may have more potential. As I say, inverted head and shoulders broke through the neckline, confirmed. We had this pullback, which is almost retesting this break, and it stalled, formed a nice morning star formation around here, and good positive influences over the last 48 hours. We've still got to break through this resistance all the way up to $22.50, $22.50. But yeah, silver also looking like it has good positive vibes this morning. Support coming in around about the $20.60, and resistance initially at 21.34, but really has to push through, as I say, the 22.50 level to open up the potential on the upside. The measured move target for this inverse head and shoulders formation is close to $25, so that's one to look out for. Copper also had a nice couple of days, or say 24 hours of positive price action after a 6-day sell-off. We stalled around about where the support was, $3.56, actually got down to $3.55. and bounced nicely from there yesterday. We've got a little bit of follow through this morning, but really need to take out yesterday's high at 366. As I say, support coming in at 354, break below there, and we're back into where we see this trend line support coming in around about there. That's the potential trend line support, 2 points. You could actually say that there's a number of points have already 1, 2, 3 maybe. But we'd leave it as a potential support line. So let's put a dashed line there. Not quite a support yet. Definitely a level to watch. That is all the way down at the moment at 332. But the horizontal levels for me are important. So this just looks like a nice channel, a corrective channel at the moment. Obviously did push higher, didn't manage to break above $4. That's key for copper. Diving into where we go from here, we go. Oh, have we done oil? We haven't done oil. What are we doing? Oil, very, very interesting levels. We're Wednesday. Remember, oil inventories in the afternoon. We should get some potential volatility from that, but a really, really nice reversal on Monday, forming what looks like, well, it's a long-legged doji, almost like a bullish hammer, and that forms a morning star formation again. So again, driven probably by dollar. There was talk about Saudi Arabia cutting production. Then they said they weren't. So had this huge volatility on those 2 days, and we're back up where we were. Well, all the way back on 18th of October. That's where we were. If you look back to September, we were also here. So nice potential for a double bottom formation here. The neckline would be clearly up here, a break of the 92.60 level. And also we've got this potential downward trending resistance line, which price action would also have to overcome. Always like to refer to my Ichimoku cloud charts, and that would take us well above the Ichimoku cloud, so maybe the start of a new uptrend, but a way to go before we see that. Levels to watch, let's really focus on the near-term levels. 82.38, that's the resistance, and really need to get below 79.80. And remember, Wednesday afternoon, oil inventories figure, that'll be the one to watch. That'll add some volatility. We will get a spike. Be careful if it's one of those fake spikes. That was the WTI crude oil. Let's look at Brent crude oil also, and this double bottom formation has that potential again. There we go. Neckline would be all the way up the high between the two lows. So the neckline somewhere around here, $99. Levels to watch on the near-term chart is $87 is the support level, $89.25 is the resistance level. A break out of the way and go with the flow, especially if the oil inventories is pushing it. So yeah, they're the levels to watch really on the Brent crude oil. Have a quick look at natural gas, because that's exploded in the last 3 days. We saw this inverse head this head and shoulders formation played out really nicely. Actually hit the, well, let's see if it did hit the measured move target. Measured move target would have been here to here. Yep, measured move target was $5.64, and that's the sort of level we come up with that measured move even when we're breaking below and confirming the formation. So the formation was confirmed around about 21st of September. Measured move target was 564, and obviously we had previous support. It actually took out that, went to previous support, and hey ho, it bounced. It's amazing how analysis and technical levels work, and when they do, there's huge potential in that. Now what we're doing from here, we've got a lovely bounce, and again we're seeing an inverse head and shoulders formation. That it's the first formation that strikes me on this. Here we've got the left shoulder, the neckline, we've got the head, we've got the right shoulder, the neckline, and we are confirmed. And this was confirmed yesterday, as you can see, and price action today has been pretty aggressive. So let's try and get rid of a few lines in the background and see where the measured move target of this formation is. Remember, it's not guaranteed, but measured move target is $9.35, and that's straight back into this area of resistance that has been building for well, all the way back to June. So that's what we're looking at. Inverse head and shoulders. Really like the look of that natural gas from the bullish perspective. Don't like the look of it because maybe means I'm going to pay more for my energy bills. So let's cover off FX now, and really sort of like start off with the dollar index and see what is going on there. The reversal is clear to see. This has led to the rallies in the assets, which are driven by or priced in dollars. The gold, the silver, the oil, the natural gas, all priced in dollars. And we see that the reversal yesterday in dollar fortunes, and it's on the back foot. and are looking to move lower. So normally we do get quite nice trends out of this dollar index. So it could be a driver over the next couple of days. Also, it drives indices. So we should see when we look at the technicals on the indices, we should see that indices have also moved higher yesterday and look to have better potential. Levels to watch on here, obviously today's low would be key, 106.81, today's high, 107.20. Really the resistance level that we need to get above to sort of that continue the overall bullish theme is all the way up at 108. And below, we've got the support coming in at 105.34. Below that, we've got 104.63. They're the levels to watch in the dollar index. How does that affect euro dollar? Well, it affects euro dollar positively because we would be buying euro, selling dollar if dollar was moving lower. And we've seen a nice reversal. We've taken out the Monday's bearish candle. We're trading above new highs on the week effectively. And if we look at the weekly chart, remember it was a bearish candle last week. So we've still got a long way to go. Potentially, this is still a hanging man candle, which is not good. We really need to take out the price action, the body of last week's candle, and ideally take out last week's high. That comes in at 104.82. So it's still a long way to go. But you know, these sort of moves can happen. Look at the volatility that we saw 2 weeks ago. We get that drive and that one-way move, and it won't take much at all to get it on the bandwagon. Nice little 4-hour channel that we've got going on. It's not a great channel, Steve. That's more like the channel. And we're breaking above the channel at the moment. We're trading above that. So it looks pretty good. From a Fibonacci perspective, let's get a look at some resistance levels to really bear in mind in this move. We're just approaching the 50%. Where is my 61.8%? There we are there. Back up where resistance is, 103.82. So that'll be a nice little target for a normal corrective move in euro dollar. Looking at cable, also looking pretty positive. Here we go. The move higher. Looks like we're forming a bit of a triangle formation, bullish flag formation, or bullish pennant, whatever you want to call it. And the resistance really between 119.57 and the 120.27. So that's where we've got to push above to open up the upside. We've seen this lovely reversal formation, could see some sort of inverse head and shoulders there. But really looking at the levels, the key levels to watch, coming up 123, that would be for me the real area of resistance to target. And that takes us, you know, these are levels all the way back to May this year. So that's the cable covered off. Let's take a look at dollar yen. The reverse for dollar yen, obviously we saw weak dollar, so dollar moving lower, yen moving higher. And we've got this continuation after this break below the trend line, which we had a really nice trend line going on. We had the intervention, which has worked so far, and prices moved all the way down to 137.72. And yesterday's bearish candle, bearish dark cloud cover, so it looks pretty positive, or negative for dollar yen, but positive for yen, and maybe a bit more follow through today. Let's wait and see. Now, take a look at indices. We did a gun to head on New Zealand dollar. We'll take a look at that at on the gun to head show and see how that played out. And we'll take a look at the FTSE now. FTSE continuing to go from strength to strength. We're challenging now the 13th of September high, which is 7,515. We're only a mere 35 points away from there. And we've also got this level of resistance here. So that's the area. We'll go have an area of resistance rather than just one level. It's a little bit more to target. 75.14 all the way up to 75.80. Levels to watch really today, 70, as long as we can stay above 7,400, then this should continue higher. Nice, really, it's a bit of a parabolic rally. So I would expect this to have quite a lot of overbought signals attached to it, or indicators attached to it. So a little bit getting towards the top of that range. Wouldn't it? Yeah, not really sort of like one to get set longs now. Should have already been long of it. DAX is still struggling around these heady heights. 14,488 is the high today. We've pulled back a little bit from there. So we're almost engulfing yesterday's positive move higher. That was the highest close we've seen since the 8th of June yesterday. So yeah, this end of year rally looks quite entrenched now. Really sort of what we've got this support coming in around about the low of 15th of November. That's 14,127. Really need to break below there for this vacuum of a move to open up. So that would be the level that I'd be watching and be concerned about if we do get below there. The Dow, again, great candle yesterday. It's really got rid of all this indecision that we were seeing over the last couple of weeks. And if we remember, last week's doji candle has been taken out now. So that doji was like a sign that we were thinking this could be topping, but yesterday's price action has put an end to that. Back to the daily chart, and we see resistance coming in the form of horizontal highs that we saw all the way back in August. That comes in the shape for 34,275. So again, only 170 points higher than this. That's the level to watch from a resistance perspective. We need to get below 33,140 to open up the downside. That seems like a bridge too far at the moment. Nasdaq hasn't quite had that same impetus as the Dow, and we've got this inverse head and shoulders formation that we are highlighting here. A good candle yesterday, a bullish outside candle taken out the previous day's price action. So good potential. We could say this is inverse head and shoulders, and we could say this was the retest. So if we do get a strong close today, then I would say there's much more potential for that year-end rally in towards a move maybe towards 13,000. So looking a little bit rosier after yesterday's price action, but don't get sucked in too much just yet. The inverse head and shoulders on the S&P that we highlighted has hit target, or stalled a tick and a half in front of target, but looks to be challenging that level one more time, and with a really strong candle yesterday, and looking for that follow through today. So that's the levels we can see on the charts and the ones we're going to go for. So let's take a look at the gun to head challenge. Now, the gun to head is where we pick a trade idea live on air. I've got a couple of ideas after analyze the markets very quickly. Each idea must have a stop and target of at least a 2-to-1 risk reward ratio. We place the trade idea at market. We publish it on the channel, so it's all for you to see. So you don't have to listen to me throughout this show and then search for this trade idea. It will be published on the channel, so don't worry too much about it. The trade expires when it hits the target or the stop. Remember, 2-to-1 risk reward ratio, that's important. And or it gets to 9 p.m, we shut the trade down. It's pretty much what we do for our intraday trade ideas. We publish about 40 of them every day, and that's what we do. That's how we approach it, and it's just one of those hard and fast rules that we take out that overnight volatility. There we go. That's where we are. Let's go back to scene. I'll tell you what I'll do. I'll stop this screen and take a look at my screen, which should give us a little bit more idea of what happened yesterday. So Steve's gun to head trade idea yesterday. Oh, not bad, Stevie boy. I'm happy with that one. We got to 9 o'clock. I was on side. So happy days. Made profit. Good. If we let it run like some people do, it's actually hit the target as well eventually at 7 o'clock this morning. So didn't have to wait too much longer. Could have had a nice night's sleep, but you might not have slept well if you had a position. But anyway, that sort of didn't go too far offside and played out really nicely. and yeah, that's a market that was brought up by one of our followers yesterday, and I thought I'll go with it. So thank you very much for that. Now, what do I fancy today? Well, let's go back over to the charts and really see what you're going to go for, Stevie boy. The indices all feel pretty good. Oil feels pretty good. Gold feels pretty good. Crypto feels pretty good. Has crypto got enough in it for me to get excited about? You know what? It has. It's got this inverse head and shoulders. I'm going to buy Bitcoin today, and everyone's like falling under the chair. We've got this overbought condition, so that there's a little bit of a concern there, but we're just having this dip back down. So I can be quite aggressive with this trade idea. We're buying it at 16,504. The that stop's quite a way away. What about there? I mean, I know where I want to sort of like target. I want to target this inverse head and shoulders formation top. Now, this gives it a nice bit of room. Let's do that. 3-to-1 risk reward. I like 3-to-1. 3's a nice number. Buying at 16,504. Stop at 16,304 and targeting 17,104. I like to round things up just because I do. And yeah, that's my trade idea. 3-to-1 risk reward. I'll get it published up straight away. It's really based on this inverse head and shoulders on the hourly chart. Little bit of a flag forming, potential bullish flag. There we go. Go forwards and enjoy the ride. I'll get that published as soon as I finish. But before I finish, let's take a look at what we're expecting today. Eurozone PMI, UK PMI, US PMI, US oil inventories, and Federal Reserve minutes. So even when we think the day's nearly over, 7 o'clock, here come the Federal Reserve with their minutes, and a little bit more to read on that. So again, we think we'll get volatility around about the 3:30 US oil inventories. We'll definitely get some more. Oh, we should get some more maybe around about 7 o'clock. So tomorrow, US Thanksgiving holiday. So maybe people are, looking at these markets and thinking, right, let me get flat. Let me get flat before the Thanksgiving holiday. And then sort of like we might be in for a quiet couple of days. It normally is this time of year. But yeah, thanks, Moch. Turned out beautifully, as we can see. That lovely trade idea. Bitcoin, not really everyone's cup of tea. Definitely not mine, but I might take a little sip of it today with that trade idea. Excellent. Thanks for joining me today, guys. I hope you've had get something out of today's show and have enjoyed it. Please feel free to interact, ask some more questions, keep watching, and yeah, be careful out there. So take care, and we'll see you soon.